Hi everyone, I welcome you all on my channel, An Evolving Mind of Compliance. So today I am taking a very different topic but very relevant, and it is relevant for everyone because everyone nowadays doing banking. Everyone is connected to the banking from the top to the bottom of the uh, people. Everyone is now doing some or the other kind of the banking. So what is the point which is relevant to the as a customer to the bank, or what as a banker we have to do, and what is its relation with the uh, financial crime compliance? So this is all would be my focus in my this video session, and this session is for FATCA and CRS. FATCA is Foreign Account Tax Compliance Act, and CRS is Common Reporting Standard. These are the two rules, or you can say two laws, which have been promulgated. The FATCA by US and CRS is from other OECD countries, another 111 or 115 countries, participating countries. So I will be speaking on podcast here as what is its requirement, what is its relevance, and what all points we need to check on this, and why it has been enacted, and all those things. But before I move on to the topic, I request each and everyone to kindly subscribe to the channel. Please share, comment, like, so that it gives me a motivation to come up with new videos on a different kind of a topic for the knowledge session, for increasing the knowledge, for sharing of the knowledge, for discussion and all those things. So my name is Rajat Gupta, and now I am going to start with the topic FATCA CRS. The FATCA is Foreign Account Tax Compliance Act is from the US, the United States. They found that there is a heavy tax evasion taking place. This has been enacted to capture the tax evasion which is taking place in the system. Tax evasion is one of the predicate offense for the financial crime compliance. People are committing the tax crime. After fraud, tax crime is one of the biggest predicate offense which is being done to launder the proceeds. So tax crime, to catch the people, those who are doing the tax evasion, the FATCA was enacted by United States. What it requires, the FATCA says a US person, here the US person is not only the US citizen, even a US green card holder, US citizen, and all other people, those who are directly or indirectly linked to the US. There is a big definition. I don't want to go into the big definition of the US person, otherwise the video will be very bigger. So any US person in any part of the world living, working, and opening an account. Let's say, for example, a US person is working in UAE and they come to you and open an account. Then what happens is that you have to mark in your database, you have to take in a declaration. The FATCA is a kind of a form, a self-declaration form from the customer. The customer, I am the customer, I am a US person, I am coming to the bank, and then along with my account opening form, there would be one more form which would be a FATCA form. And that form I have to self declare that I am a US person and I have to give the US social security number for to the bank with whom I am opening the account in the UAE. The UAE bank, while opening the account, will mark me as reportable. What would happen when I will be marked as reportable? Reportable means the information of my income balances in the account will automatically through the regulators of UAE will be exchanged with the IRS, Internal Revenue Services of United States of America. So In case I am hiding my income from the US government, that I am earning the income over here, and or maybe I am reducing my income, my return in the US, that would be caught, because the automatic exchange of information has taken place from the government of UAE, from the regulator of the UAE with the regulator of US. So in this way, the tax crime could be curtailed. So this is the FATCA. So they have to report automatically. And kindly note, in FATCA, every time US person, irrespective of the country they are living in, irrespective where they are tax resident, the FATCA, US is the country which levies the tax on its person globe on their global income. So irrespective of the fact that where they are living, the US person will always be reportable. Now comes the CRS, Common Reporting Standard. Common Reporting Standard is on the replica of a FATCA which has been enacted by the participating nation of around 111 or 15, and it has been, the rules have been promulgated by OECD, and the G20 and G7 and all have come together to form this CRS, which is entirely a copy, uh, almost a replica of uh, FATCA. So, what in CRS, it is not based on the nationality. Kindly note, there is no question of nationality. There is called tax residency status. I am an Indian national. I hold an Indian passport. I live in UAE and I go and open an account in UAE bank. As long as I am the tax resident of UAE, I should be self-declaring myself as not reportable tax resident of UAE, and I will give them the, my, in case they require, I will give them as a proof of my residency in UAE as my Emirates ID, tenancy contract, and visa copy. So the UAE bank will mark me as not reportable, and no information of mine will be exchanged with the government of India, because I am not the tax resident of India. The CRS, kindly note, this is the big difference between a FATCA and a CRS. CRS is only purely based on the tax resident. So as per the UAE law and in majority of the countries, if you stay in the country for more than 180 days, you become the tax resident of that particular country for that financial year. So if I am staying here for 180 days and more than 180 days, I become the tax resident of UAE. The self-declaration would be from my side as a customer to the bank would be that I am not reportable. And then as a banker, you should be able to validate whatever the information I am given is right or wrong. As a banker, you have only the responsibility to validate the information I have given to you through my Emirates ID, visa, and tenancy contract. You can know that yes, he is the tax resident of UAE, therefore he is not reportable. There is a confusion in the people's mind. Let's say, for example, I am I have an income in India also. Let's say, for example, I have an income in India. I am paying the taxes in India. That since my tax applicability is there in India because I am generating the income in India. But the Indian government do not want the information on my Indian income because they already have the information. They want the information on my income which I am earning outside the India, and in case I am a tax resident of India. In that case, in that case, they want my information. Otherwise, they don't want. Even though I am earning the income in India and I am paying the taxes in India, it is the podcast here is not about the paying taxes. It is about tax evasion. So I am a tax resident in UAE. I will be marked as not reportable in any of the UAE financial institution. However, there is sometimes people say that I have a tax liability in India, but that does not make them the tax resident of India as long as they are living in UAE for more than 180 days in a particular financial year. So what happens is that then you need not to give a PAN number to the bank because you are not reportable as long as you are a tax resident of UAE. You have a tax applicability in India, you might have an earning in UK, US, somewhere else. That does not mean you have to incorporate 4510 tax identification number. No, that's an ambiguous, that's invalid self certification. And if the bank accepts it, it's the mistake of the bank to accept such thing. Person will be tax resident of a particular country, and based on that tax residency, it will be marked as reportable and not reportable. It could have a tax liability in here and there. I have a tax liability in India, I might have a tax liability in UK, I might have a tax liability in US. My Although I am an Indian national, I am a tax resident of UAE. My UAE bank will mark me as not reportable. Being Indian national, marking opening an account in India, be it NRE, NRO, or any account in India, that account will be marked as reportable. That account in India of mine will be marked as reportable because the information will be shared with the UAE authorities. Although as of now UAE is not, we are fortunate that UAE is not taking personal income tax, so there is no as such requirement of sharing the information. But in case any personal income tax exists in UAE, or let's say if I am living in UK, although I am an Indian citizen, I am living in UK and I am paying the taxes to the UK government and I have an income in India. So my any account, I am the tax resident in UK, my any account in UK will be marked as not reportable. But although being an Indian national, my account in India, NRE, NRO, will be marked as reportable, and the information from Indian government will travel to UK government that this person have income over here, and they will see and club my income of India. And if I have already paid the taxes in India, that much discount will be given to me in UK. If the tax paid is more in India, I will not I have to pay any taxes to the UK on the Indian income. If it is less, I have to pay the balance amount of tax to the UK government. So I wanted to tell you the difference because I have seen people over here coming and saying that I do pay tax in India. It is not about where do you pay the tax, where you are tax resident. Based on that, the bank has to mark you as reportable and not reportable for the CRS purpose. So it is purely based on the tax residence. As of now, I am talking only about an individual. The companies have a little different calculations, but the video will become very longer. In my next video, I will come for the corporate account. There is so many things to it, but be very clear. FATCA is for US person, and it will be always reportable irrespective of the tax residency of the customer, because US says we will charge you the tax on your global income. But in CRS, Common Reporting Standard, it is always based on the tax residency. There is always a confusion that person might have a different tax applicability in different countries, but person is tax resident of one country, and accordingly where he is opening the account, if that person is in the where let's say I am an UAE resident opening an account in UAE bank, I will be not reportable. So you need not to ask my PAN number or any other TIN number for that, as long as I am a tax resident of UAE. So I hope I have made it very clear about FATCA and CRS from the customer and from the bank perspective. As a customer, you have to self-declare where you are tax resident and whether you are reportable and not reportable. And from the bank perspective, you have to validate if whatever the person is declaring is correct or not correct. The bankers are not supposed to give the tax advisory that whether you pay the tax, whether you don't pay the tax, whether you are liable to pay the tax or you are not liable to pay the tax for their tax residency and all those things. For this, there are regulated consultant firms, they should be guided to consult with them. The bankers should only validate the self certification. They should ask the documentary proof. Now there are things which comes into the picture for the individual customers. Let's say, for example, I have, let's say in UAE, for example, if you invest 2 million dirham, you get the visa and residency in UAE. That is called residency by investment scheme. See, this is the point during CRS for the due diligence perspective. It is not something that which makes any person directly reportable or not reportable. Let's say, for example, I am a property owner over here in UAE and I have obtained the residency visa through that property. But I live in UK or Germany or any other country, let's say, for example. Although I come and I declare I am a UAE tax resident and I give you the visa, my Emirates ID, and bankers are, and I give you title deed also of my property that I own the property here, and then bankers will generally accept it and mark me as not reportable. But this is wrong. You have to check. I may be owning a property in a country, but I may not be staying here. Under those circumstances, when you see my visa or Emirates ID is based on the property ownership, then you should be asking where do you live? And the tenant and sorry, title deed which I have given only conveys that I am the owner of the property. It does not convey that I stay there. To find that whether I stay there or not, there are other measures that utility bill payments should be there. The other thing is also there. So that is the which document that you have to take to ensure that customer actually lives in the country, because there are so many businessmen, so many people across the world, so many HNI customers, so who have the property over here, and accordingly they have the visa, and but they do not live here. Then that means they shouldn't be marked as not reportable under circumstances where the person is not living. He has given you the title deed, visa, and Emirates ID. Under such circumstances, the person will be reportable if he is not living in UAE, although he has got a residency. But vice versa, a person owns the property and living in UAE in the same property or in any other property, then you have to mark it as not reportable. So the residency by investment scheme is the point for the due diligence. And these laws, what I'm talking about, I am taking UAE as an example because I stay here and I wanted to create an awareness about the people about this, but it is same across any part of the world. It's same. There are so many countries like Spain or so many countries are there which have got a scheme in residency by investment. So if you are in the Spain or any other part of the Europe, America or something, some countries are offering this residency through investment, and a customer comes and open an account with you, then you have to check whether the customer is actually living in the country or not. So just by default being in a visa holder or an other document, it does not mean that the customer is living in the country. He may or may not be the tax resident of that particular country where he owns his property. So these are the major and a wider, I have given a wider view around the podcast here. So be very careful while filling. It is very important. You unnecessarily, as a customer or as a banker, shouldn't become a part of any crime or a particular tax evasion that that unnecessarily it becomes a responsibility or a liability of or an accountability on someone's part, and because it's a very much a crime, and you unnecessarily become part and parcel to that crime if you do not declare it as a customer, and if the bankers do not do their proper due diligence and they do not do their proper verification or validation of the self certification from the customer. So this is very, very, very imperative and important. Please keep this point in mind, and I hope that you will definitely be benefited out of it. And once again, I request each one of you please, please subscribe to this channel. I would be coming with more informative videos. It would be a great impetus and a motivation to me to bring you more stuff of knowledge, to share more stuff of knowledge with you. So, with this, I thank you each and every one of you for watching this channel. And in my next video, I will be coming on a corporate FATCA CRS. And with this, I thank you very much.